You know, sometimes a stock doesn't just climb, it launches. And today, we're going to dissect one of those absolute rocket rides. We're looking at the anatomy of a single, super volatile stock, USAR, to really understand the story that the data is telling. And it's a story of incredible strength clashing with some really serious warning signs. All right, let's dive in. So, let's just start with the number that makes everybody's head turn, a 135% gain. That's the kind of move traders dream about. But that big number, it's only part of the story. The real kicker is how fast it all happened.
Yet this wasn't a slow and steady climb over a year. This happened in a single quarter. We're not talking about a gentle slope here. We're talking about a vertical takeoff. A pure price explosion.
Let's kind of trace the flight path, right? So back on July 16th, USAR is just sitting there at a pretty modest $16 and change. Then things start to get interesting. On October 2nd, you see this massive surge in trading volume. That's your first clue that the big money is paying attention. And it all leads up to October 13th, when the stock peaks at almost $44. Just a wild, wild ride. But what was behind it?
To really get the why, first we have to look at all the signals that were flashing bright, bright green. I mean, these are the indicators that were basically shouting at traders that this trend had some serious muscle behind it. So, one of the most basic ways you can check a trend's health is just to see where the price is now compared to its historical average. Think of it like this. If a car is suddenly going way, way faster than its average speed, you know it's got some serious momentum, right? Well, it's pretty much the same idea with a stock. And I mean, just look at this. The stock's long-term average was sitting at under 13 bucks. The current price? Over 38. It's not just trading a little bit above its average, it's in a completely different stratosphere. That kind of massive gap signals some incredible underlying strength.
And it wasn't just one signal. It was like everything was screaming bull. You had indicators that track money flow showing huge amounts of cash pouring in. You had other tools that measure trend strength just flashing very strong. It was like every single gauge on the technical dashboard was pegged, pointing straight up.
But here's the classic dilemma, right? All the data says the trend is unbelievably strong. But that very strength, well, it creates its own risk. What happens when you push an engine that hard for that long?
And that brings us to the other side of the story, because buried deep inside that very same data were some really clear signs that this engine might be seriously overheating. Signs that suggested this whole thing just might not be sustainable.
The big concept we need to understand here is overbought. And it's not a complicated idea. It doesn't mean the company is bad or anything. It just means the price has gone up so far, so fast, that it's stretched way beyond what's normal. Think of it like a rubber band being pulled and pulled. You just know a snapback, a price correction, is probably coming.
And this wasn't just one lonely warning light blinking on the dashboard. No, this was a whole chorus of them. You had the Relative Strength Index, the USAR, the Money Flow Index. All these different independent tools were singing the exact same tune. This stock is overbought.
Let's just zoom in on one of those. The Relative Strength Index, the RSI. Now, usually, any number over 70 on this thing is considered overbought. USAR was at 87. That's not just a little overbought. That's deep, deep into extremely overbought territory. It's a huge red flag that a pullback is likely. So, to really put this into perspective, check this out. Analysts can use statistics to figure out where a stock's price should be based on its recent trend. It's like a data-driven forecast. So let's see how that forecast matched up with what was actually happening.
And wow, this is really the heart of it. The data-driven prediction said the price should probably be somewhere around $22, $23. But the actual price in the market? Almost 39 bucks. That's a staggering 71% deviation. The stock was trading 71% higher than its own statistical trend said it should be. That is exactly what analysts mean when they start using words like bubble.
So what you have here are two powerful, completely conflicting forces. An unbelievably strong uptrend, crashing into extremely overbought conditions. This puts the stock at a major crossroads. So where could it possibly go from here? Well, analysts basically mapped out three ways this could play out.
So you've got three potential paths. The bullish case, where the rocket just keeps on flying. The bearish case, where gravity finally kicks in. And then there's the neutral case, where the stock just kind of hovers for a bit, trying to decide what to do next. Okay, let's break them down. The bullish scenario says, hey, momentum is king. The buying just continues, and the stock pushes up to test that big psychological $40 level.
The bearish scenario, on the other hand, says those overbought signals are just too loud to ignore, and you see a sharp drop back towards its medium-term average, maybe around 21.75. And then the neutral case? The stock just kind of churns, trading sideways, while the bulls and the bears fight it out for control.
So after weighing all this conflicting evidence, what was the final word? What was the takeaway from the people who analyze this professionally? It all boils down to that classic balancing act between risk and reward.
And here it is, the bottom line. The analysis pretty much confirms everything we've seen. The trend is, without a doubt, incredibly strong. But those warning signs are just too big to ignore. The key phrase here, the one that really matters, is extreme caution. The potential for a huge reward is there for sure, but the risk of a really sharp, really painful drop is just as high.
And that leaves us with the fundamental question that every single trader has to face. When you're staring at a chart that has gone completely vertical, you have to balance that fear of missing out with the fear of being the last one in at the very top. The story of USAR is just a perfect example of that high-stakes game. How do you know? How do you really know when the rocket is about to run out of fuel? That's the million-dollar question.